I'm currently on these two sites that I use. So I actually use two sites for my Forex economic calendar. I use Forex Factory and I use Trading Economics. So when you're on Forex Factory, you're simply going to go all the way over to the right, hit this green little filter icon, and what you're going to do is only reveal high impactful news, right? So you're going to do high impactful news, and once it's revealed, you wait, hold on a second. All right, yeah. So once it's revealed, then you are going to have everything checked but um, the silver and the yellow. You don't want to show the yellow, and I guess actually no, show the silver because this is going to show you bank holidays, which are important to know. So leave the yellow alone. Leave everything checked but the yellow, because the yellow is the lowest impactful news, and this isn't enough volatility for our trading strategy. If you trade smart money concepts, ICT, smart money, institutional, supply and demand, the supply and demand comes from the orange, red that you see, because we need actual demand and actual supply enough to move the market significantly so we can actually find setups. Okay, so yeah, right now, once you filter that, it's going to reveal to you for the whole week. Currently, we're focused on today, which is Wednesday, and it's the US dollar news. So we have 2 a.m. we had GBP news. So the Great British Pound in the UK. We had US dollar 8:30 a.m. and we had and we have 10:30 a.m. US dollar news. That's medium impactful news. 7:30 p.m. is Australia US dollar. So right now, yes, we know all the pairs that are coming out for today, all the news that's volatile for each currency around the world. But what we're going to focus on is we're actually going to focus on right now. So right now, it's currently 9:06 and it's past 8:30. So what I usually do is you can either trade before or after the news. You guys probably like to trade after the news, which is fine. If you know that there's news coming out and you're on the charts and you see your setup and it's about to take place before the news, I would still take that anyway, because if you're trading with the smart money and on the right side of the market, that the news actually should help your trade into profit. It shouldn't go against you. So this is why I trade with the news. I don't trade against the news, because the news moves the market. So if the news moves the market, and we need to trade with it, not against it. So this is why it's important and crucial for us to pay attention to what's coming out every single week. So right now, I'm going to head over to this economic calendar, and it says the same thing here. High impactful news. We had GDP news. I actually don't know what country this is. I feel stupid for not knowing. But Australia and US dollar, I didn't filter this country out. So there's some countries like China and other countries that I actually don't trade. So like here on this website, on this filter, tradingeconomics.com/calendar, you're only going to have revealed the 3-star and a 2-star. The 3-star reveals to you the highest impactful news, and the 2-star reveals to you the medium impactful news. So I trade supply and demand, smart money concepts, institutional. So in order for me to make money, I only want to pay attention to the 2 stars and the 3 stars, because this represents how much the market's going to move. All right. So think of that impact star meter as a meter of how much money you want to make. So you want to make a little bit of money, you choose 1 star. You want to make more money, you choose this star, because this represents the impact and the volatility of the news. It represents how important it is, and that affects the charts directly. So right now we're about to go back to this chart, and we're on US 30. So right here, I'm going to explain this. This explains it. You see all this medium price action right here. You see all this small movement, and I'm actually going to show you. You see all this? All of this was low volatility, all right, because we had no news. Right here, this medium impulse, this blue movement going upward, was caused by medium volatile news. So this was also smart money. But when you see tiny candles like these right here, that lets you know that these are retailers. So people sitting at home like me and you and other retail traders, because we don't have millions of dollars to move the market like these guys do, to make the market move in these giant blue impulses. We can only react to these movements. And if you notice, most retail traders, which are sitting at home, they tend to react to the market. They don't create the movement. So I would rather pay attention to who's creating the movement and then go off of that. So what we're going to do now is we're going to pay attention to what's happening here. Right now we see this impulse, and this impulse was caused by what? US dollar news, because we're trading US 30. So there was news today that actually caused the US 30 to have demand, because on my chart, blue represents bullish and gray represents bearish. This big ass blue candlestick represents bullish activity. And that activity was most likely caused by what happened today, because if you see the red, that means that's the highest impactful news. So there was a volatile news, and if you paid attention earlier at the beginning of the video when I said volatility equals opportunity, and volatility equals activity. Okay, so when there's red and orange, that means there's activity in the market, and that means we're gonna make money. So, and presents opportunity. So the opportunity for today for this US dollar currency, which is, because we're in America and that's our currency, that caused this demand right here on this blue candlestick. This bullish demand was caused by the news. So the news moves the market. So we trade with the market, not against it. So we don't make up what's going to happen. We actually pay attention to the supply and demand. And supply and demand can be simply noticed by news. Also, if you're on the physical chart, the candle size, the bigger the candle, the bigger the move. The people that create the big candles are smart money, the people that control the market and have the most capital. And this proves it. I'm literally proving it, because if you look on the bottom of the screen, we're on the 15-minute chart. No retail or trader has enough money to show this enough significant momentum on a chart. This is caused by most likely thousands to millions of dollars worth of capital inside of this pair, inside of this movement right here. And so that's why supply and demand, when you're trading smart money, ICT, or any of these things, or you're someone that trades fair value gaps or imbalance gaps, it's important to understand the economic calendar, because this economic calendar can help you and reveal to you opportunities like this. So now I can potentially trade this right now, and if you notice, every time there's news, the news causes an imbalance, because when there's high impactful news, the market becomes imbalanced, so it's not balanced. And when it's not balanced, the market needs a correction. So you know how a healthy market goes up, down, up, down, up, down. When it's imbalanced and there's a lot of news happening in the economy, the market doesn't have time to necessarily do that. So you'll see a lot of times the market just going straight up, and maybe it won't go down and it'll just keep going up. And it can't do that forever. And so that's the whole point and reason why we trade these gaps, because when there isn't a correction, which is when the market comes down before going back up, that means that the market isn't balanced. So right now it's imbalanced, it's not balanced. And so until we see the market come back down before going up, then that's balanced. And so we're simply just entering on that correction, okay? Or on that pullback. The same applies to when you're in a bearish scenario. So if you're in a bearish scenario and you're going down, then there's the imbalance right here. There hasn't been a correction or up movement before the down movement. The whole idea of trading is to enter on the movement before it continues to trend, right? So right now it looks like on US 30 the trend is about to be bullish. So the ideal scenario is to buy this demand, because we have demand in the market. So I would buy around that red line or below here, because that represents demand. Because right now US 30 is at 43,202 and the demand started at 42,820, and it can either come back down to 42 or it can come to 42,970. And so really it's all about price and demand. So right now we're at a high price because there's demand. So if you look on my watch list, you see how US 30 is green. So there are people on the news seeing US 30 green and they're like, oh my god, they're having FOMO, fear of missing out, FOMO. They're having fear of missing out, and because of that FOMO, they're wanting to buy assets high instead of waiting for them to come below at the dip to be cheaper. And so yeah, this was a really simple video, and I hope this helped you. I didn't want to get too in depth in this video, because I'm actually this is how I like to teach, and this is how I like to share what I've learned, is by just simply showing simple concepts every single day in bite-sized pieces, because your brain can actually formulate and digest the information that way. So yeah, guys, I hope you liked this video, and I have a free trading group. If you guys are interested, let me know. It's free. And yeah, so I hope you guys all have a good day, and comment below where you're at in your trading journey. Are you a couple years in? Did you just start? Comment below. Peace.